Well, surprise, surprise, we're seeing more troubles in the banking sector. It has been all calm since the bankruptcy of Silicon Valley Bank and the bailout of its depositors, most of which were not covered by the FDIC insurance policy. And ever since then, everybody said, oh, hey, crisis averted. The Fed did the right thing. We have such smart people in charge of our country. The banks are safe. And the next bank that looked like it was going to be the next domino to fall, First Republic Bank, despite, seeing a massive plunge in its stock price, didn't go under. First Republic survived, the wake of SVB, and everything went back to normal, right? Well, today we have the First Republic Bank. Their stock is down 50% today. They were at like 100. They were at 120 something dollars a share just a couple months ago. Actually, less than 2 months ago. It was at the start of March, and now they've gone from the 120s down to the 8s. First Republic Bank is a single-digit midget. And why is that? Why is it that First Republic has plunged yet again and lost half its value in one day? Well, what else but credit risk? That's what you have to worry about when you're a bank. And it seems that outflows are increasing again, and First Republic is looking to sell its assets just like SVB did in the lead up to their bankruptcy. So they're looking to sell off assets at a loss in order to meet the demand for outflows, in order to pay back their customers who are pulling money out of the bank, which is only going to lead to more people wanting to pull their money out of the bank and an eventual collapse of First Republic Bank. And then what's going to happen is all of the depositors at First Republic are going to get bailed out, and we're going to be told crisis averted, no problem here. And then we'll be told that's the real end of the banking crisis, and that the Fed and the FDIC have saved us all from financial doom. But is that the case? Are we just okay now with Fed funds at like 5%? After all, new home sales are beating expectations still, with mortgage rates in the 6s. Mortgage rates have more than doubled, and the housing market's doing just fine. Businesses are doing better than ever, we're told. And so rising interest rates haven't impacted any of it. The banks aren't really in trouble. This is what we're being told. Does that make sense to you folks? Do you really think that we know the whole truth? Based on past history, I would tend to say we're not out of the woods yet. In fact, if we look back to the crisis of 2008, it played out over a very long period. It started in 2007. And yet, we were almost to the 2008 election before it was really clear that we were going into, the greatest recession of any of our lifetimes. But the first cracks in the system were way back in 2007. And in fact, housing prices peaked in 2006. And so SVB very well may have been the Lehman of our generation. And just as was suspected at the time, First Republic Bank may be the next domino to fall. After that, it'll be somebody else. We'll probably have a period of quiet. And we'll just start to see more and more cracks in the system forming until it reaches a critical mass. I mean, even in the mainstream, there seems to be near consensus that we're going to enter recession later this year. But they tell us, it'll be a mild recession. That's what the Fed says. Once as a bank, you reach the stage of having to sell off assets at a loss in order to meet outflows, it's over. First Republic will cease to exist potentially by the end of this week. Now, it's possible that the regime interferes to try and prevent First Republic from getting to that stage. Maybe they'll try and bail out the entire bank. so that it doesn't technically go under. And so instead of just bailing out the depositors, based on what they did with SVB, it seems like that's what they're going to do. They're going to say, okay, yeah, we're going to let First Republic go under, and we're just going to make everybody whole. And then that's supposed to calm everyone who has money in all the other banks that are, the next most risky banks after First Republic. It's supposed to calm them down and say, okay, you see, I don't need to pull my money out of the bank because the Fed will just bail me out. And so I can leave my money in the bank, and then nobody pulls their money out of the bank, and then there's no banking crisis. And who knows, maybe that strategy will work. We'll just have to see. It almost seems like this is a California recession and not a recession anywhere else. The housing market's crashing in California. The banks are going under in California. There's a banking crisis amongst California banks. San Francisco pricing, I think housing pricing is down like 10% year over year. And yet those of us over here in the East, in places like Florida and Tennessee, I'd imagine, Texas, all the places that the Californians, and the New Yorkers are moving to, our housing prices are, doubling, tripling, quadrupling. Our economic growth is off the charts. They're building everywhere, building businesses, building houses, building apartment buildings. The banks are flush with cash. They're loaning it out to everybody, at absurdly high interest rates, and everyone's paying those interest rates because, business is just so good they can afford to pay high interest rates. And so maybe our country is just becoming economically bifurcated, just as we are politically bifurcated. And, you could see a depression in the blue states and no real economic slowdown in the red states. I'm just trying to observe what I see. I'm not saying that because I want that to happen. Frankly, I think that there should be a collapse of our sham economy across all 50 states. I want to see asset prices across the board return to, where they should be historically. I would like all of this asset price inflation that has occurred over the last decade, I'd like it to be undone. The folks who have benefited from all the asset price appreciation above where it should be based on, normal valuation metrics, it's been the boomers, and, my generation and anyone who comes after me, or really even the people who are older than me by maybe 10 years or so, there's not real much of a chance to get ahead. Unless you do exceptionally well, then perhaps you might be able to live what was once considered a normal average life. But if you're making an average normal income, you're going to live in squalor. And you will own nothing, and you probably will not be happy. So, with that said, I will continue to monitor the banking crisis, and I will see folks back here tomorrow.